Hello and welcome to another update video about Algorand. Algorand did drop a little bit since my last video, and we are getting closer to that critical support level at 10 cents. This is obviously basically the next larger chance for it to find support and to turn around, because there isn't much before getting to 10 cents, and we take a look at that in a minute. Just again wanted to express my, I would say, concerns about this structure. I did explore it before. Talked about it before. It's a structure that looks like similar to what you could see at the time on the lunar chart. This I'm not saying you would compare it. The projects are different, but the structure of the chart. And the reason is you've got this possible wave one up, a strong decline, next wave up, strong decline, next wave up, strong decline, and so on. And I haven't actually prepared this, but maybe. Let's see if we actually see anything on the lunar chart that I could show you. I don't actually know. Do they still have the old lunar chart on there? Let's just zoom out, go to the daily chart. I think they do. They do. So let's, and here's what I mean. It's a bit ugly, isn't it? Now it is this structure. Here to the upside. That looks fairly similar. If you compare that, for example, to Bitcoin, Ethereum, many of the other coins, it looks completely different. This is not an impulse. For example, here on the lunar chart, what you had here was probably you sometimes only see this, looking back at the chart after something happened, because obviously you first of all would assume that you are in something bullish. Here, for example, you can look at the chart now and you say, basically, quite clearly, this was an ABC with a C wave being an ending diagonal, some sort of a very weird expanding diagonal, which is first of all very rare, but it's possible. It's a so-called diagonal pattern. It makes sense as part of an ABC structure here, and then we came down. Now, I'm not saying the chart predicted that. Well, to a degree, it might have. To a degree, however, it was built into the chart. I'm not saying that this was supposed to happen, because obviously a fundamental event happened. But the problem is, if you have a fundamental event that hits a chart that already has built in a corrective wave structure to the upside, then you have a concern. And we have a similar situation here, that you have a similar wave structure to the upside, where you could say we had a wave A up, a wave B down, and then some kind of an expanding diagonal to the upside. A very, very ugly pattern we had here. And you can easily count it as an ABC. Now, this would be the bearish interpretation. And it's hard to explain, especially if you a lot of viewers probably don't have that exposure to Elliott wave. But if you have a chart like this, it is at least a reason for concern. It is at least something where it's worth thinking about it, or at least knowing about. Because if you have a chart, for example, like Ethereum, where you don't have a structure like that, and then you have a coin that has it, even though this could be bullish, because there's of course a bullish interpretation as well, it just means there's a bit of a reason for, let's say, concern, or you need to have your risk management at least in place. At least know about it, that there are coins and charts that have a larger chance to be corrective on the way up and then impulsive on the way down. But you don't even need to look at the Elliott waves. It's just look at the chart and you see all these overlaps. That is just characteristic for a corrective wave structure, and the move down looks actually quite impulsive. So if the move down looks more impulsive than the move up, that's another reason for concern. Just saying, right? Just saying. And obviously this is not so much of a problem if you hold certain support levels. But the problem is, like with many coins, Algorand didn't hold key support levels. So the last main Fibonacci support would have been the 88.7% Fib level. Now that was at 40 cents. You can see when we came down here and retested from below and failed. Oh well, the retest was successful and it kept dropping afterwards. That's certainly not a bullish sign. So the bear market is still obviously ongoing, And I don't think we've seen the lows yet, as at least we have no signal that the downtrend is over. The downtrend could be over soon, hopefully. But the point I try to make here by showing you that corrective price structure potential to the upside is that we can easily say that this might drop below 10 cents and goes below that low. And then you basically have an ABC to the upside and 5 down. And then you have a chance to rebuild it from somewhere below 10 cents. If the sentiment comes back, if the positive sentiment comes back, which I hope it will. But with altcoins, there's never a guarantee. There's never a guarantee anyway in the crypto market. Okay, but this is something to know about, worth knowing about the structure. As I said, there's of course a bullish interpretation, and we can count this as a 1, 2, 3, 4, 5. That, however, is not an ideal wave structure for the bulls, because it would have to be a diagonal pattern. And if you have the chance to invest in a coin that you have 2 charts, you have 1 chart which has a diagonal pattern, which could easily be a correction up, which would be followed by an impulse down, and you have a coin that has an impulse up, well, I would always invest in a coin that has an impulse up, because it just, not talking about fundamentals here, only talking about the technicals here. And because it gives more confidence, if you have a diagonal pattern to the upside, especially if it is not a long price or chart history, then it's never that reliable. Let's just sort of a little bit talk about the background here. Okay, so let's take a look quickly at the short time frame for Algorand. So let's zoom in here. And we talked about, we're on this way down. We moved up in 5 waves. Obviously, we had an ABC here. 1, 2, 3, 4. The 4 was the peak when we retested the 88.7% fib level from below. And we're now coming down in the 5th wave. And the 5th wave is obviously subdividing into 5 waves as well. And my idea was that, I'm going to highlight those waves for you, that we had here a wave 1 that came, no, 1 second. We had, I just need to think, how did we have it? Where's that fit? Okay, yeah, then we had here a 1, 2, 3, this a 4, and a long wave 5. That looks a bit, in terms of proportions, not ideal, and we can label that in different ways, but I would argue it doesn't really so much matter, because so far it's worked out quite nicely. We talked about that within this last wave 5 then, we had here a small wave 1, 2 as well, here wave 3, here wave 4. Yeah, we were waiting for lows in one of the last videos, and that then happened here in this wave 5 down. And again, we can label that differently, but they would lead to similar outcomes. So I don't want to confuse everybody here by showing you too many wave counts. What is relevant is what happens here now, because here we talked in one of the previous videos about an expanded or expanding diagonal again, an expanding wedge, you could even call it, descending wedge, where, and I might now change this trend line a bit. So I could move that trend line down a bit. There's always a few different ways of how these trend lines can be drawn, but fair enough, we've got 4 touch points down. We talked about here, this could have been a wave 1, 2, 3 that reached here now 16 cents roughly, 16.5. And we're now ready for something like a wave 4 to the upside. Ideally, that would not be bullish, it would just be some kind of a corrective move up. Could reach sort of the 20 cent level, probably not much higher. If it goes much higher, it would probably break out of this wedge pattern to the upside. And then we could explore if the low was already in. But at the moment, I would say there's probably one more leg down at least. And we could really test the 10 cent level, because this is the major support that we've got here that we just talked about, as you can see. And if we add the VRVP that gives us historical volume, then we can see that most of that historical volume appeared higher. So when we dropped below that 30 cent level, that is when it really started dropping. And there's now an insufficiency of previous trades and previous volume. So naturally support levels are already gone. And the last one is really that 10 cent level. If we drop below that, then I have to scrap that bullish scenario that we have on the chart with the wave 1 up, wave 2 down. It already gets quite unlikely now. And then we have to look at this, that this was only an ABC to the upside, and we're coming down in 5 waves. And the problem is, if you have that, if you have that, and we should seriously avoid dropping below that 10 cent level. I try to explain to you why. And we can see it on the log, we can see it actually on the log chart better. I can't remember if I showed you that in the previous video. I might have. The problem is, if we really have ABC to the upside and 5 down, then this might set Algorand up for a slow death. Now, I know a lot of people don't want to hear that, but from a chart point of view, this is what exactly could happen. And you see these things better on the log chart, because the 5 waves down could only be a wave 1 to the downside. And then we could see in the next bull run a wave 2 to the upside, but probably or possibly would not make a new all-time high. And that will be the warning. If in the next bull run we do not see a new all-time high, then this is most likely just a wave 2. And then we have a problem, because then we would move up in the next, maybe next bear market or next move down. We would see a wave 3 down. There will be a wave 4 up and a wave 5 down, and that could kill Algorand. Yeah, not saying this will happen, but the signal will be if in the next bull run we will not see a new all-time high. Now, coins that die don't normally die from one day to another. Well, Luna was maybe an exception, yeah, if something fundamental happens, but if something happens like a slow death, which is typically what happens because people lose interest, then you move up slowly in the next bull run. Yeah, maybe you get close to the all-time high like a wave 2 would do. Yeah, maybe to the 78.6% retrace or something. Yeah, maybe getting here to around 133 or something. But the warning is, with any coin, and that's a tip for the next bull run, if you are still invested here, I mean, it's up to you what you do, but I personally wouldn't sell now because it's probably dropped too far. But they will probably recover to a degree in the next bull run. I would then take profits on all coins, certainly take profits and try to get out of positions which created a corrective price structure to the upside in this bull run, or in the last bull run. Because there's a serious risk that they will only make exactly this, a wave 2 up, 3 down, 4 up, 5 down, and people will lose interest and they will fade out, and it could take years until they sort of, die. On the linear chart, it will look a bit like that. Something like that, okay? So it's yeah. It is what happened before. It's nothing that I make up here. It's what many coins do, okay? And many assets, also stocks and shares. Okay, and that's my update about Algorand. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.